Groupon is looking to add 6 more banks to help underwrite its IPO. One skeptic, though, of this public offering is Sucharita Mulpuru. She's the vice president and principal analyst at Forrester Research, who recently said in an open letter, she said this IPO game isn't about finding value. It is about finding a greater fool who actually believes the valuation is true. Trust me, you will be the fool. Sucharita joins us now from Charlotte, North Carolina. Certainly not holding back on your words about Groupon. Why rush to judgment on this so quickly, Sucharita?
Well, the challenge is that when you saw the SEC filings of Groupon for its IPO, Groupon's revenues were more than $700 million, which was a significant gain over its 2009 figures of around $30 million.
Right.
But the problem was that it lost more than $400 million, and it continues to lose that amount. So that really is what smells of 1999 and overvaluations. The amount of organic growth that the company has is significantly smaller, and that's really what the valuation needs to be based on, not the $30 to $700 million figure.
But this is people would argue is a very young company, only just a few years old, and what you're talking about, the losses, has to do with the fact that they've had to buy their growth, right? They've had to spend hundreds of millions of dollars to market this company, but that's understandable for a high growth company like this. Eventually, it will pay off, as it has for other companies that have come around.
Yes, and I mean, potentially in the long term, eventually they could get to some sort of a very profitable business model. But in the short term, the problem is that they spent hundreds of millions of dollars getting to this level of growth, and this requires billions more in capital, even over the next few years, for them to continue this sustained level of growth. And that is the part that I think is unsustainable. There's no doubt that likely what will happen is that they will get to the point where there's probably some new management that comes in. They decide that they'll cut costs, and that's how they'll get to profitability. But that's going to require a significant shifting down of the overall top line and the overall revenue growth figures. I just don't see that top line continuing to grow, and that's what it seems that all of the valuation is hinging upon.
So you don't see Groupon being able to raise more money then after this IPO to be able to fund this growth? Is that what you're saying?
The problem is that at some point they've got to show someone the money, and they've got to show someone true valuation. There is all kinds of speculation around whether merchants really find this useful. All of this, I thought that your point, Betty, actually about the fact that it's so young actually works in their favor, because there's not the history of understanding whether or not Groupon actually drives business for merchants and actually drives them new customers that are valuable. And because of that, because of this doubt, everyone wants to give them the benefit of the doubt, assuming, oh, this growth can continue on forever. They can continue and grow and expand to new business models. But the challenge is that to acquire new merchants is incredibly labor intensive. Merchants now haven't even been fully persuaded that Groupon is valuable for them. And the reality is if that doesn't happen, their level of ability to acquire great deals is significantly at risk. And this business depends on great deals.
But Sucharita, I mean, it sounds like, though, when I was reading through the prospectus, I mean, Andrew Mason is interested in making more than just a coupons-only company. He was talking about how they're going to spend money to branch off in different areas. And I would presume that the reason why they're doing that is that they have this huge and very valuable customer base, right? 15 million customers at the end of March in the first quarter. That has to have some value, though, don't you think?
Well, okay, so the number that they often throw around, which I think is where the devil is in the details, is that they throw around the 80 million email addresses that they have. And, the reality is that 80% of them have never purchased. And certainly consumers, a number as large as 15 million can be valuable. Yeah. But remember, these are all people who have purchased at 50% off, and so the question is, what kind of customers are these? Certainly, if they can slice off maybe the top 10% of those customers who probably are incredibly valuable. These are people who are going to spend much more than the value of the Groupon. They're not just there to get the Groupon and never shop with the merchant again. And if they can segment that consumer, that's absolutely where there's value. Is there continued sustainable, billions and billions of dollars year-over-year growth in that consumer? No. But there's likely to be profitable exchange and profitable value from that segment of consumers. I've actually always maintained that if they can segment those consumers and match those best best consumers with the most valuable merchants.
Right.
That's where the money is. But the challenge is that they have set themselves up for such an enormous growth trajectory that they're not effectively segmenting yet. They can't even afford to do that yet because they just need to grow as rapidly as possible, and that's getting them into, I think, a little bit of trouble with the merchants.
Right, but some would say that, Amazon, when they first started, I mean, they had all these customers. All they did was just sell things to you and, sell books. But look at how diverse.
Look at where it is.
Exactly.
Absolutely. Yeah, I mean, I think a best case scenario is that it could be Amazon over time, even though the Amazon story took about 10 years to get to where it is today. And ultimately, it wasn't the book selling that gave them profitability. It was their marketplace model that they happened to stumble upon. I would argue that Groupon's probably actually more akin to a company like Priceline. And Priceline, like Groupon, grew to $1 billion incredibly rapidly. But that second $1 billion of growth took many, many years and significant amounts of changes to their business model and changes in their management team. And I think that that's probably more akin to it. Priceline, like Groupon, disruptive model, exciting in the beginning, but kind of once it's time to pay the piper, that's where the challenge really comes.
Sucharita, thank you. I really appreciate you coming on to talk about
Betty.
this.